Good afternoon, Britain. It's 8 minutes past 1. Now, the government is refusing to release details on the Prime Minister's ongoing secret cabinet meeting, with many calling it a crisis meeting with his inner circle.
Many reports claim that the Chancellor, Rachel Reeves, is on notice after her plans for growth have been dealt a major blow after another poor forecast from the Bank of England.
Well, joining us now is the economist and wealth manager Jonathan Davis, because Jonathan, is not just the low growth that the Bank of England is predicting, but also inflation that could shoot back up near to 4%.
Yes, that's the relatively short term. Long term, I think we need to expect something broadly similar to the 60s and 70s. With materially higher inflation. I would estimate 5 to 10% per annum inflation on the average, materially higher interest rates, and therefore materially lower economic growth for the next 10, 20 years.
Now, one of the things that the Bank of England have pointed at is the quite significant growth in public sector jobs since COVID, I think around 500,000 public sector jobs, but no noticeable increase in productivity. And at the same time, the private sector is flatlining. How is Rachel Reeves going to stimulate growth? Actually, the only thing that is growing at the moment is the size of the public sector.
Exactly. We're rapidly moving back to a semi-communist state, just like in the 60s and 70s, which caused ultimately the national industrial action and the 3-day week. Because, of course, in those days, pretty well the government employed everyone, the power workers, the coal miners, the transportation, you name it. Before privatization, the government employed and owned practically everything and everyone. And while you have a largely communist government, you're not going to have economic growth and you're not going to have economic prosperity for the people. As ever, the political class and the billionaires are going to do exceptionally well, but the people are going to do exceptionally badly.
OK, here's a free market case for the Chancellor, Rachel Reeves. She has ended the universal winter fuel allowance payments that was, perhaps, one might describe it as a more communist benefit, giving millionaires free money every winter. That's no longer the case. And also she's talking about red tape, approving runways, making it easier and faster to build stuff, particularly to allow the private sector to come in and build small modular nuclear reactors, to build houses, to build other energy infrastructure. Is there not a bit of Javier Milei in this Chancellor?
Yes, perhaps 1/4 of his index finger. Look, Trump has said beautifully, for every new regulation he brings in, he'll get rid of 10. Javier Milei, my hero, has abolished 1/3 of the state in the last year, and Argentina's economy is growing like wildfire. Their stock market is soaring. Their unemployment is rapidly reducing. Their inflation is back to normal sort of Western developed economy levels. Until and unless a UK government gets rid of a broad brush load of regulations, load of quangos, hundreds of thousands of public sector workers, reduces taxes, in other words, goes towards the free markets that we experienced in the 1980s, until and unless that happens, and by the way, we haven't had it since the 1990s, until we have it, we're not going to have economic growth. Of course, there will be winners, but in general, there will be losers.
Jonathan Davis, Wealth Manager, thank you very much for that, sadly, very negative assessment. Well, we're giving you 2 chances to win in our latest Great